I think you've got kind of a bit of a conceptual problem in the sense that I think that having rates so low for so long has really changed the goalpost for so many people. And so like they think like, hey, we got to get back to normal. And you're like, we did.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be
And
invested
we
into
are
directly.
back
Any
with another
references to
edition of the
performance of
Daily
securities are thought to be
Dots. And I
materially
am
accurate
joined
and
as
actual
always
performance
by
may
the
differ.
brain
As
trust
always, please
himself,
remember
Mr. Chase
investing involves
Taylor.
risk.
So I missed yesterday, but we haven't. I'm sure you talked a lot about that inflation report.
Yeah.
I assume
The last 2
so.
days, I went deep on that and the crazy pills the market was on. Go on.
Yeah, and I want to revisit that because of everything that's going on. You and I have not yet had a chance to debrief on that to the extent that I'd like to. But where are we at on data for the week? Did we get anything out? Anything out today? Any new data out today?
Yes. So the last 2 days, I've been talking about the importance of the upcoming PPI, the Producer Price Index, and we got that this morning, and that was red hot, white hot, however you want to look at it. So you were expected to get. So if you just look at the final demand PPI year over year, it's supposed to be 2.5%, and we got 3.3%.
Ooh.
Yeah. So month over month was supposed to be 0.2, and it was 0.9. So a significant beat for PPI, and it's important for people to remember. Tracking at home, the average person doesn't know what PPI is. So it's producer prices. It's kind of think people call it like factory gate prices. It tends to lead CPI. Like, so think of it as a leading CPI by kind of 3 to 6 months a lot of the times. So all the way out to a year. So it's telling you now it's one print, so it has to sustain itself to matter more. But it's telling you like, hey, like tariff inflation is starting to hit, and if this keeps up, then CPI is going to get very very interesting in a few months. And the feed through into PCE suggests that the core PCE coming up will be about 3%, 2.9, 3%, something like that. So way above target still.
I'm still scratching my head as to the market's reaction and even like financial journalism outlets. Like, I just don't understand why that data that came out was not really concerning to people. Because the concern I've got is you're increasingly seeing signs of stagflation.
Yeah, 100%. And something I tweeted out today was two things I want to talk about real quick. Is one is we had a pivot from the White House. If you remember back a few months ago, it was like, hey, look, tariffs are going to cause some inflation and some pain, but it's worth it. It'll, in the end of the day, like this would be good. And for whatever reason, they pivoted from kind of warning that, yeah, it'll cause some inflation, some temporary inflation and some problems. They went from that to like, no. This will not only will this not cause inflation, but you're just, a propagandist if you say it will, and you have tariff derangement syndrome, and like basically there's no cost to it either. Like this is just part of the golden age, and it's like, to me that was a bad strategic move. Like they should have stuck with like letting people know like, hey, this might suck for a little bit, but it's worth it. Like stay with that messaging, because now everyone's like, no, it's fine. So when people feel inflation going higher, it's going to bother them more than if they had that like warning. You know what I mean?
Yeah, I look. If the majority of this uptick in if inflation is caused by tariffs, it seems that they're most certainly playing a primary role. Um, I guess I agree with you. I don't think the messaging was good at all. Just on just political, chess. I just don't think it was a smart way to do it. That being said, I kind of see what they mean. Meaning, yeah, tariffs can push prices up, but it's not the same as inflation. Meaning, unless the tariff rates keep getting pushed higher, it's going to be a one-time jump. Or
but I'll push back like I already have on that, because remember, like, call it a third of this stuff isn't consumer goods. It's inputs into our factories. So if you, let's say you buy a piece of industrial equipment once every 4 years, well, you may not see the inflation from this for 3 years, right? So like some of this is going to keep trickling in year after year. And even if it just creates, 30 basis points of inflation every year for 3 years or something like that, that's a significant problem for policy, I think. So I now no one's talking about that. No one seems to think of it this way, which gives me a headache. But I think the one-off nature of it, like academically clearly true that like, hey, you just raise all the prices real quick once. Like I think that makes sense to people, but I think we have to be careful with and think about it from like a more first principles. Like just think of the average firm that is going to have to pay higher prices for their inputs. So like steel just got cost more all of a sudden. That's like a perfect example of what you're saying. Like that's over from an inflation standpoint. But a lot of the inputs people that if they don't get them every month or whatever, like it may take a year or two to really flush this out of the system.
Yeah, so you and I really don't disagree as much as it seems on this. I agree with everything you're saying. What I'm saying is, and I think a lot of what you currently see going around about inflation, including a lot of the misnomers and a lot of the confusion surrounding it, I think it's kind of like two different schools, right? It's like we have to look at it slightly different in both cases, because when inflation goes up from tariffs, that is not the same dynamic, or it is not the same danger in it in and of itself that would see your inflation starting to spike up in a country that we could think might be subject to a serious currency devaluation. Do you get what I'm saying?
Yeah.
Like, so where one type of inflation is sort of like getting diagnosed with terminal stage 4 cancer, right? The other type of inflation is like a new tax on the economy. And it is a tax on the economy, but
Right.
it's just it doesn't point to us losing control of the back end of the curve, or terminal dollar decline. And so I think when we talk about inflation, I think that's one, in my opinion, in my experience, I think that's one of the real bones of contention, and one of the sources of so much confusion is if you say, oh, that's going to increase inflation, people are like, the dollar's going to collapse, and you're like, no, right? It's just it's not, we're not talking about Zimbabwe, right? Not yet, anyway. I mean, I guess
I totally agree with that. The one thing I would say though is, because we've been above target now for 5 years, like clearly, if you just kind of look at all the expectations moving forward, like, yeah, they're elevated from what we got used to, but like nothing's crazy. No one's expecting Zimbabwe, right? But every year, every month, every year that you spend over 1% away from your target, like I feel like the more inflation expectations creep higher. So from that standpoint, I think we have to be careful with being like, oh, well, it's just tariffs and like it'll go back away. Like, because if people demand bigger raises because their prices are just refuse to go down, like, or shouldn't say down, it refuse to stop going up a lot. Like, it can kind of embed itself and reinforce itself more. So it's almost like you could say tariffs could play a role in kind of starting a flywheel effect, and we can't ignore that.
No, because I mean, and I know you and I both had significant frustrations about this in the past, because for whatever reason, modern economics has chosen just to completely ignore this. But you cannot ignore, in my opinion, the behavioral side of it, because it's a huge part of inflation and debt and currency spirals, right? I mean, it's the part nobody talks about, but it plays a big role. And you're right. I mean, when you're looking at this economy, I don't think it's outlandish to sit there and say, as far as inflationary pressures go, it feels like a tinderbox in so many different ways. And I think that throwing tariffs into that mix is like smoking a cigar next to that tinderbox. I mean, you might be fine, but you might not.
And I'll reiterate what I've said before. None of us know, because we've never done this. Like a massive importer of goods has never put giant tariffs on, in a time like this. And especially after we became so globalized and integrated with the whole world supply chain. So like I say a lot of stuff with confidence here, but let's all be real about that, how misplaced the confidence is. And just as, if I had a debate with Stephen Mirren about how inflationary taxes are, neither one of us really know.
Yeah. No, and you and I've said that over and over. This is as complicated of a board as I've ever seen, and so much of it is because you're operating so far outside what we'd consider the norms of the last 40 to 50 years. And in a lot of ways, you don't really know what it's all going to look like in 5 to 7 years. There's entirely the possibility that it doesn't look as different as we think it will 5 to 7 years from now. There's just so much up in the air. And yeah, that's nothing new, right? That's not news that the global economy and the global financial, world is complex. I mean, it's probably the most complex system on earth. But it is getting really tricky. The which brings me back to the reaction to that inflation news, man. I just, because if I'm sitting there and I'm a big equity bull here, or in a lot of ways, I felt like that was almost worst case scenario, because when you see all of the evidence, now it's not 100% conclusive, but a lot of evidence of softening at different parts of the economy, right? And then I see inflate. Now, granted, it's not hockey sticking, but it's the comp between the two that troubles me. Do you follow me?
Yeah.
Like,
And there are plenty of measures of inflation that are hockey sticking, which no one cares about, no one's talking about. But like, you go digging into like a lot of goods, it's stuff that, the very tariff heavy goods imports, like a lot of that stuff is hockey sticking. Like, it's a small percentage of the overall, and it's coming out of deflation. So it's not like you feel it. It's not like it's making 4% inflation yet, but
where's the market got it priced right now? Like, are we pricing in a 25 basis point cut?
Yes. So yesterday was,
I don't know how
yesterday was interesting because you started seeing people talk about 50. Bessent called for 50. You saw, and then the market started pricing in a chance of 50. So you got to like 100. I think the highest I saw yesterday was a 111% chance of a 25 basis point cut, which is a weird way of saying like 28 basis points was priced. So you're starting to push towards 50. After the PPI today, you're at a 93% chance of a cut next month. So 23 basis points. So you're almost completely priced for a cut still, despite what will be high and high and rising inflation print for July.
And with unemployment hanging in steady at 4.1, right?
Yeah, and we got claims in today. They're totally fine. The labor market's clearly, on thin ice, like, is the best way I can think to describe it. But at the same time, I mean, people aren't getting fired.
I mean, yeah, there's no alarm bells at 4.1% unemployment. I can tell you that.
Yeah, exactly. I mean,
we're
4.2 now, but it and it would be higher if we didn't have so many non-native born people leaving and stuff. But still, like, I don't know. None of this says cut into rising inflation to me. Like,
no,
my
and that's
bar for that would be really high.
Yeah, and here's another thing that I think really gets confusing. That, like, if you sit there and you express any skepticism about the need to cut interest rates, it's like the people on the pro cut side, typically Trump supporters, they get mad at you. Do you know what? And you're like, it's not everybody wants lower house rates and all that.
I would love to refi.
Yeah, I would love to too. It's not that you're cheering against that. It's looking at it from an economic position and saying, okay, you might think it's the right idea to cut here, but economically, looking at the data, it says to stay. I mean, if I'm looking at that data, like I said, I want to cooperate with Trump. I'm rooting him on, right? I voted for him. Doesn't mean I greenlight everything he does, certainly, but it also doesn't mean I have to agree with everything. And when you look at the threats of cutting interest rates here, especially what I see going on with a lot of these inflation metrics, Yeah, would we all like lower rates? Absolutely. Sign me up for that too. But bottom line is, it, I think you're looking at a scenario right now where I think I think the biggest monetary policy mistake that could be made right now is overcutting. I think the risks of that outweigh the risks of staying. Or, you know what I mean? I just do. And now 30, 60 days from now, that view could look differently, but I think you should wait for it to look differently.
Yeah, and honestly, and we're not going to have 9% inflation again like we did in COVID. Like that's not what tariffs are going to do, in my opinion. But this does remind me a little bit of that period because if you go back to one of the reasons back in 2020 that I had a lot of conviction around inflation going really high was because PPI took off, and it was
Hmm.
before CPI. No one cared because no one cares about PPI. But I remember watching that and being like, oh, like this is going to get nasty, and you had it gave you a lot of time to put on the trades and everything because no one cared about PPI, despite the fact that the correlations are pretty solid for 3 month ahead CPI and all that kind of stuff. It feels similar to me like we could take off unless you get a nasty growth slowdown. That would obviously cap inflation but that would give you the reason to cut and make you kind of confident you're not cutting into a ripper of inflation. Because if not, like think back to how many people hammered the Fed for cutting and staying too low, more importantly, back in 2020, 2021,
This guy.
right. And a lot of the same, what's annoying to me is like, not you and I, but a lot of the same people that were very annoyed by that are the same voices today being like, oh, we got to cut. Like, well, do you not care about inflation anymore? Like, if that's the case, that's fine. But like, just own that. And another thing too is one of the things I was gonna say earlier that bothers me is a lot of these people are saying like, oh, the tariffs aren't causing any of this inflation. Like, it has nothing to do with it. Well, like to me, I'm kind of like that's scarier if that's true. Like if
Yeah, because if they haven't impacted it at all yet, that's a bigger problem because they're coming.
right, and even if it never did impact it, like okay, like, but you're telling me we have 3% inflation without it, and you want to cut? Like, I would rather you tell me like, look, half this is just tariffs and it'll go away in the next year or two. Because then I'm like, all right,
Yep.
well, maybe I'll look through that. But if you're telling me like, yeah, we have 3.1% core inflation that's rising rapidly, and none of it's in a tariff, then I'm like, then why am I cutting for you? Like, I don't.
The other thing that I think is, I think you've got kind of a bit of a conceptual problem in the sense that I think that having rates so low for so long has really changed the goalpost for so many people. And so like they think like, hey, we got to get back to normal. And you're like, we did.
Yeah, I mean,
This is normal. Right? That wasn't normal. It's not normal to get 30-year money for 2.5%. And it ain't just here in the United States. Go poke around the world. That's abnormal.
right.
Right. And so part of it is the other reason why, look, when it's all said and done, what is the difference if you have a 25 basis point cut or not? I mean, it's not a huge difference one way or the other, right? But my whole thing is, I just think you're delaying the inevitable because I think that society needs to understand that we have turned a corner and we are in a different environment. And if you find inflation above 3% a year as intolerable, I don't think the next 8 to 10 years are going to be a lot of fun for you. You know, I look at inflation. If you were asking me to ballpark it right now, my bet is that inflation spends several years bouncing around between 3.5 to 7%. That'd be my guess. I think you'll see spikes for various different reasons, and you'll see it abate. But I mean, what's the long-term inflation average in the United States? 3.2%, isn't that it? Something like that.
Something like that. It's around 3. Yeah.
Yeah, I mean, so and we were probably running right at like 2 for the whole post-financial crisis
Right.
deal, right?
Which was totally not normal.
No, and now to spend 8 to 10 years bumping around between 4 and 6, that seems like that'd be kind of the perfect bookend. Maybe seven's a little bit high, but you know, I just I just don't think the economy. I don't think you can put that toothpaste back in the tube. Meaning, if you want full employment and you want the other metrics of the economy to look good that you care about, I think you're going to have to run considerably higher levels of inflation to get it done.
Right. And if you're going to run it hot, you have to accept not non, ZERP policy. Um, and as as I've discussed a lot, like it's honestly stimulative to give bondholders free money anyway. So like, it's not like it's holding the economy back. It helps the private sector economy. It just looks bad on the government's balance sheet, and we all get stressed about it. But something definitely worth noting. Now we're more than a week away, but next week, I think is on Friday. Chair Powell will do the Jackson Hole speech. And that one feels real important coming in, because obviously if he comes out kind of hawkish, the market would have a problem, because we just have this weird thing now where like the market seems to just only view the good, inflation only view the good, and growth it's like a weird mix lately. And I don't just mean, it's one thing when stocks do it, because usually you can go look at mechanical flow stuff and like systematic buying. You're like, all right, whatever. I guess it makes sense. But to see bonds, like to watch bonds just smoke crack this week has just been, that's different, because I can't blame that on systematic buying or whatever. Now today is a little different. Like the 2 years up 6 basis points, the 30 years up 5. So like it reacted to PPI a little bit, but coming in, it was like, and you had like IWM up 1,000,000% Monday, Tuesday, and you're just like, okay, like, so bonds are rallying because growth is slowing, but then IWM's ripping. Like, what? Like it was incoherent price action for the first couple of days of the week, or first few days of the week, I guess I should say. Now, like, all right, now IWM's getting face planted of the day, and bond yields are back up a little bit, dollars up. So today makes sense to me, although we're still way underpricing what this means for inflation. Like still like seems like no one buys it. I don't know.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
Yeah, and that's, you and I've spent a lot of time talking about this. It really is wild to me to see moves like that, because it's just not the way markets work. And I wish I had an answer. I mean, we could throw out several different theories about, and I don't have big confidence in any of them. I've got pretty strong confidence that they all play a role, passive and retail involvement and all that kind of stuff. But it's just really odd to see a market. Whenever you're looking at a market and saying you're wrong, there better be a lot of humility injected into that. But you just see multiple cases of it. You see it on a pretty regular basis where you're like, that's a nonsensical move. And then usually in a few days or in a few weeks, it undoes itself. But you're just like, why would you make that move in the first? It's a head
Right.
scratcher, man. It's
I
just,
mentioned I mentioned on the show, like this bond move, especially this week, was like the most disconnected feeling I've felt in a while, where it was like, this is insane. Uh, so
by the move, you would have
it's nice
thought that
today to see it kind of make sense, but
by the move, if you would have just showed me the move in the market response, I would have been, you must have had a stronger than expected growth reading, and you must have had a considerably lower than expected inflation reading. And
yeah.
it wasn't that.
And I saw people running with the story of like, oh, like the goods inflation's like already going away, so like the tariff impact's over already, and I'm just like, that caught on and like really went far, and like it's just one of those things where like, all right, let me go look at the data, make sure I haven't lost my mind. You go like back, look at the data, and you're like, yeah, no, like these people have lost their mind. Like this is
Well, and
true.
the other thing, is you made the point. That extra cost didn't just go away somewhere, right? Like it's
Yeah,
there, and a lot of these are the materials. So you're not even gonna feel that price increase
no,
until the end product is built and then somebody buys it.
which is
But
probably a year away. Not even this month, next month.
yeah, and in that way, especially when you look at the materials, you're probably months away from the majority of that even starting to be felt.
Right. How many
And then
cars
I
has
would
has GM built with the new really expensive steel and car parts and aluminum? Like
right,
probably none.
right, probably not. No, no. Now I wouldn't expect to take all that time to trickle through. I mean, I would expect
Sure,
them to be
sure.
assigning those increased prices to already, manufactured vehicles. But still, to your point, I mean, that stuff's going to take time to filter through. And people saying we've already felt no, you haven't. I mean, if you look at some of those things and they look like they're the same price as they were 30 days ago, then it that price hike didn't go away.
Right. And that's how you
You
get a
know,
Six Sigma move in PPI today is because people are doing the math wrong on how this works. I don't know like how else to explain it, but
Yeah, and that's the part to me that's the most confusing because I just don't understand why this market moves the way it does and reacts to things the way it does. I don't understand how it's pricing in information because it's not doing a very effective job of it. It's just really weird, man, to be a guy that, that we spend our big chunk of our lives doing this for a living and transacting in these markets on a daily basis. And all of a sudden, not all of a sudden, it's happened somewhat gradually, but when you see the market behaving so much differently, it makes me feel a little unsure. Right? Not a little unsure, considerably unsure, because yeah, so many of these things that you know to be true and know that this is the way markets, you just get all kinds of false signals. It's really noisy. Um, would we have anything? I also, just because we've been in so many meetings and stuff, obviously been keeping an eye on markets, but I haven't really been looking out. Any interesting earnings announcements we've had come out this week?
um none that come to the top of my head, but I'm usually not the best at staying super on top of it. But I'll run a little screen to um see if I've missed anything. Something worth mentioning maybe today is the president announced that they're considering like a equity stake in Intel. That's interesting for sure.
Hmm, that is interesting. What'd the stock do?
Let me go look. I mean, I would assume it really got after it, but and this is after he had the CEO in. Yeah, so you were up 7% on the day, and then another like 3 after hours. Um,
Was it trading at?
at 24.54. You're
Okay.
back to where you were like back in March. So nothing, it's not great, but it still has ripped a lot in the last. Let's see, you are 29% off the low.
When he says equity
Minus.
stake, is there any clarification on how he defines that? Would it be equity stake as in like a joint venture or like partnering with them, or what would do?
Uh,
He can't mean buy equity.
no, nothing yet. I mean, it could mean that like they just basically did it with MP Materials. That one makes more sense to me. Like a direct, you need the commodity that's not really all that, you know, the financial incentive isn't there to go do rare earths because
No, yeah, that's what I'm saying.
but
Intel doesn't need somebody to
Intel's
buy a
like
chunk of their
yeah, they're already
Intel.
a beast.
Yeah, they don't need somebody to step in and buy their stock. They need to step in and buy chips.
Right.
You know what I
So
mean? Like,
and maybe it turns into something like that. I don't know. All I know is it's interesting. Let's see.
yeah, no, it is.
I forgot CoreWeave. CoreWeave has been one of the darlings of the market, and it had bad earnings. It was down over 20% yesterday. Bad earnings, air quotes. I don't know what actually happened there, but
Well, I mean, trading at 35 times revenue probably had something to do with it.
yeah, the margin for error, whenever you're
Yeah,
in the stratosphere is low. So
yeah, that's argument we've been making for a long time.
Tencent had strong earnings and jumped. So that one I remember. I know I saw John Deere kind of clip the wings of their guidance a little bit today. So
Another one that's kind of confusing to me too on the talking about things that we don't understand about this market. The lack of even interest. And again, this is not a prognostication or investment recommendation. Okay, but the lack of interest in Chinese equities is confusing to me. Asian equities writ large. Everything I see coming out of that area of the world looks significantly better than it does here. And it corresponds perfectly with the very sizable amount of stimulus that's going on, that administration's seeming determination to get equity markets up. I mean, look, I love it because the investment proposition is still just as good as it has been. I think there's just as much juice left in it, but the lack of interest in this is kind of mind-boggling. Like
yeah,
talking about things.
I could not agree more. Like, and that, like you say, like, and it's Asia, like because you get a little bit of interest in Japan, but like, I like Korea more than Japan. Nobody cares about Korea, like here, or probably I don't think anyone investing in Europe cares. Like, and to me, it's such a great place to have capital. Uh, and maybe one of the best parts of China is like they're stimulating hard. They're starting to direct more and more of it at what they need to be directing it at, which is like domestic consumption. And like they're doing very real policy stuff that is very significant. Talking about, like heavy subsidization of like preschool and like daycare and things like that. Um, so they're really making all the right moves. But despite all that, like our tariffs are slowing down their industrial side. That they refuse to let the property bubble reinflate, so that holds a lot of stuff back. So despite them getting all this right, like they still cannot really get the economy going. And the beauty of that is it just means they have to just keep doing more. So they're going to do too much, in my opinion, and then you get you get the result of doing too much stimulus, like which tends to be charts going up and to the right in a significant way. So that's kind of what I expect still from there. And it's clear to me like the trade war is at a stasis with them. Like Bessent said last about that. He's like, yeah, I'll probably talk to my counterpart there in 2 or 3 months. Like we're just going to meet every 3 months and then do an extension of the ceasefire. Right. So that's not going to get worse or better, I don't think.
Yeah, yeah. I don't really see a lot changing there, but like I said, when you look at that amount of stimulus, you look what's going on around them, you look at what's going on with their automobiles, you look at how something remarkable that they did much faster than anybody predicted was getting to the point where they were an exporter. Like, so they made plenty of more complex stuff for other people, but their own companies becoming right true exporters of more complex, more durable goods, right? More complex things. They've turned that corner so much faster than anybody thought.
Yep,
And
exactly. That's what really changed my view.
yeah, and then you look at so many of the similarities behind some of their big tech companies and the opportunities in front of them and the way AI can, you look at so many of their companies are in a perfect position and are right in line to have the same kind of transformative and incredible opportunity that is AI. And then yet you go do, comps on the valuations and they're in another universe.
Not to mention they don't have to do all the capex because their stuff's so much cheaper to do. So like their power's cheaper. They're getting way more
Labor.
out of an average data center than we are. Like so, yeah. Not to mention labor because now it's going to be robots. Like
Yeah.
their robotics lead is in my opinion astronomical over ours. And think about this: whenever you get to the stage where you have a robot making robots, you start getting into pretty intense, labor cost. A hockey stick, call it, in the right direction. And I mean, like Japan has a factory. They don't even have lights in it because they don't need them because the robot doesn't care if the light's on.
Right.
Like
Right.
you think about cost savings on stuff like that.
Heat.
Like, yeah,
Don't need to heat them.
yeah,
Right.
exactly.
I think of the safety measures and the different things that you don't need to have in place and all that kind of stuff. My whole point is saying there seems to be a very large disconnect. If you believe prices in the U.S. are somewhat justified, it's really hard. It just seems like a massive disconnect to believe that a lot of these big tech prices are justified in the United States and the current prices in China are justified. Just right. Like if our big tech companies are going to win as big off the backs of AI as the market would have you believe, how would their big tech companies not? It just doesn't. It just kind of defies logic, at least for me.
I think if you look at S&P 500 versus CSI 300, I want to say we're trading like 23 times forward earnings and they're at like 15, 16. So like you're talking.
Oh yeah, but 15,
handles.
yeah, but 15, 16 in an earnings trough too.
Right. And that doesn't take into account some major players who have well under 10, right?
Yeah, yeah, and then the other thing is that really doesn't tell the full story either, because really what you should be doing is you should be looking at their big tech companies valuations compared to like FANG names and Meg 7 names. And that's where you see even a much bigger divergence. And that's kind of my point. Like if you see a world where all this stuff is, all these US tech companies are doing what they're doing, how does Alibaba not benefit from that?
Yeah,
I just
whose AI model is like 1% worse than OpenAI's. Like
Right. It just fails to reason. Another interesting one. I haven't seen any follow-up reports on it, but something you and I have been talking about for a long time. I never would have guessed it would have gone like this. But Perplexity offering up, what was it, 38 billion for Chrome?
34, I think it was for Chrome. Yeah.
Has Google even responded to that yet?
I haven't heard anything. I mean, I assume Google does not want to sell it. Maybe if, maybe it's worth them making that offer in case the judge is like, no, like seriously, you got like three months to sell it. Then it becomes a thing where they probably just do it. But
Boy, a joint venture could be pretty sexy.
if you can get it through, yeah, I think it's pretty obvious they should work together in some fashion because they're building on the backbone of Chrome already. And frankly, their browser is 100 times better than Chrome. So it's crazy for those two to not find some way to combine.
Yeah.
If they pull that off, man, I would, I'd sell the farm to put it in Perplexity if personally. I wish they were public on that front because they would be the best browser on earth and everyone would figure that out. Like right now, no one's going to figure out the comment's awesome because most people don't know Perplexity. But if all of a sudden your Chrome turned into it, you have no choice but to know.
What is their private market valuation right now? Do you know?
Last check, I think it was like $9 billion.
And they just made Whoa, that seems low.
That suggests somebody out there is willing to give them a bunch of money to make that thing happen.
Well, if somebody's willing to, if you got a $9 billion market cap and somebody's willing to loan you 34 billion, I got to believe you're probably underpriced.
If I was a VC with 25 billion, I would happily give them my entire stake to go buy personally. But
yeah, man, that would be that would be an absolute home run. What other else interesting, man? I feel like we covered most of the stuff I want to get through today.
Yeah, for me, the big one was that PPI. Like, it's just that's big. Like every time I think the dollars is finally going to pick up, it doesn't, and every time I think it might break down and make me look dumb, it doesn't. So that's going to get more important to watch, kind of going into next week. We're at 98.20. Another thing too is tomorrow we have options expiration for the month, so you kind of go back to unpinning this gamma situation right after this hot PPI, going into Jackson Hole next week. And I bring this up because if you were to just be in negative gamma going into Jackson Hole and then Jackson Hole is bearish, then you get an interesting setup. All very hypothetical and speculative, obviously, but it's just kind of one of those things worth kind of a sticky note in the brain for next week.
Right. No, that's all good stuff, man. Yep, that about does it for me too. Still trying to absorb that the way this market interprets that inflation information, but
same.
We'll see.
Today made me feel a little less.
Yeah,
but
a little less crazy pills we're putting the drink today. Thank goodness.
And for like an hour after the PPI, granted the PPI comes out really early, but for like an hour after it hit, bonds like weren't even reacting, which was lovely because let you go get in the futures market and do some stuff, but it, like in real time, I'm like, how are these not moving?
I know.
It's crazy.
I don't get it, man. Anyway, all righty, you guys. Well, as always, you know where to find us. Go on social media, YouTube, Twitter. Just search Know Your Risk Podcast. Not too tough to find. And we will be back again tomorrow, as always. Until then, have a wonderful evening. You're listening to the Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.